Welcome back to Investing Talk Podcast. Today we're taking a close look at HUT 8. This is based on a detailed report from May 2025 covering, well, everything from financials to strategy.
Yes, we've got a good amount of information here. Financials, business strategy, the industry context, management, valuation, risk.
On competitors too, right?
And competitors, yes. It's quite comprehensive. So plenty to unpack for you.
Okay, let's start with that financial snapshot. Q1 2025 revenue, $21.8 million.
Which sounds like a number, but you need context. Q1 2024 was $51.7 million.
Wow, okay, so that's a drop of about 58%. That's pretty steep.
It really is, almost 60%. That clearly signals, a negative trend there revenue-wise, likely driven by lower Bitcoin prices compared to the year before, maybe some operational factors before upgrades kicked in.
And it gets, well, tougher.
Yeah.
The net result for Q1 2025 was a loss, $134.3 million. Compared to a net income of $250.7 million in Q1 2024. So a huge swing from significant profit to a very significant loss.
That kind of swing really tells you something about the volatility, doesn't it? I mean, operating in crypto mining and now energy infrastructure, it's not for the faint of heart.
Absolutely.
Yeah.
And because of that loss, well, you can't really calculate a meaningful positive price-to-earnings ratio right now.
No, not really. Historically, when they were profitable, you might have compared them to other miners, maybe some energy firms.
But that comparison's off the table for the moment.
Right. It puts the focus much more on future potential rather than current earnings power when you're trying to value it.
Now, the report didn't specify the exact debt-to-equity ratio, but it's probably fair to assume, given the industry.
Oh, yes. Crypto mining. It often involves substantial debt. Those initial hardware and infrastructure costs are significant.
So that's something to keep an eye on, especially with the current losses and that revenue drop. How they're managing debt is key.
Definitely. And thinking about cash flow with the losses, falling revenue, and they're spending on upgrading their hardware, their ASICs.
Right, those investments.
Free cash flow is likely under some serious pressure.
Makes sense. Capital expenditures for those upgrades wouldn't be small.
Not at all. Essential for the future, for efficiency, but a drain on cash in the short term.
And similarly, return on equity. Likely negative given the recent losses.
Another metric that's hard to use for comparison right now against profitable peers like, say, Marathon or Riot.
So the financial picture, at least for Q1 2025, it's challenging.
It is, but like you said, it's a snapshot. We need to look at the strategy behind it.
Okay, let's move on to that. The business and industry dynamics. HUT 8 describes itself as an energy infrastructure platform. Bitcoin mining is a big part, but also high-performance computing.
That energy infrastructure platform phrasing is interesting. It's broader than just mining.
So what does that mean exactly? Are they selling power, building power plants, or?
It seems like a bit of both, or at least the potential for both. They are developing their own power generation assets that helps control their biggest cost in mining energy.
Ah, okay. Vertical integration, kind of.
Sort of, yeah. And they also talk about capitalizing on electricity supply shortages. That suggests maybe selling power back to the grid or providing grid services. It's diversification.
Got it. And they highlight their upgraded ASIC fleet as a competitive advantage. Hash rate up to around 9.3 raise hash per second, with efficiency around 20 joules per terahash. Why is that JTH number so important?
Lower is better. It means less energy used for the same amount of computing work. Electricity is a huge operating expense, so better efficiency means lower costs.
So mining cheaper, essentially.
That's the goal, cost leadership through efficiency, especially vital when Bitcoin prices might be lower or volatile.
And it feels like this shift towards broader energy infrastructure is pretty deliberate, moving beyond just crypto, given how up and down that market can be.
I think that's the strategic play, trying to build more stable, diversified revenue, less reliance on just the price of Bitcoin. A more resilient model, potentially.
But there are industry headwinds, too. Rising energy costs, the report mentioned, a 29% year-over-year jump per megawatt hour. That's got to hurt.
Oh, absolutely. A 29% increase. That puts direct pressure on margins unless Bitcoin prices rise enough to offset it, or their efficiency gains are massive, or these other energy initiatives start paying off quickly. It's a big challenge.
And then there's regulatory scrutiny. The environmental impact of crypto mining. That's getting more attention globally.
Right. That adds uncertainty, could mean stricter rules, higher compliance costs, maybe needing more investment in renewables, depending on where they operate.
Plus, the tech itself keeps changing. Faster, more efficient miners all the time. It's an arms race.
It really is. You have to keep investing just to stay competitive on hash rate and efficiency. Fall behind, and profitability can erode fast.
On the flip side, there's growing demand for sustainable power solutions integrated with computing. Could their energy focus turn that into an opportunity?
That seems to be the hope. If they can package sustainable power with their computing services effectively, that could open up new markets entirely. It aligns well with that strategic pivot we talked about.
Okay, let's talk strategic moves and how the market reacted. Because this is interesting. Despite those pretty bleak Q1 financials,
The loss, the revenue drop.
yeah, their stock price actually went up after the earnings report. Rose over 4.5%, then another 7% shortly after. What's going on there?
It does seem counterintuitive, doesn't it? But it strongly suggests investors were looking past the Q1 numbers and focusing on something else.
And that something else seems to be their strategic announcements.
I think so, particularly the launch of this majority-owned subsidiary, American Bitcoin.
Right. Aiming to be a major miner, partnerships involving the Trump family, talk of a potential IPO for that subsidiary.
That combination, the high-profile names, the potential separate listing, likely generated quite a bit of excitement and speculation about future value. Separate from Hut 8's current integrated structure, it creates a different narrative.
And alongside that, they did boost their hash rate significantly in Q1, up 79% from upgrading those ASICs.
Which shows they're still committed to the mining side, even while diversifying. They boosted capacity, positioning themselves to capture more upside if Bitcoin prices improve, while simultaneously building out the energy angle.
Okay, let's compare them to the competition. You mentioned Marathon Digital Holdings, Riot Platforms as top competitors. How does Hut 8 stack up?
Well, as we saw, Hut 8's recent revenue trend was sharply down. Performance for Marathon and Riot has also been quite volatile, often moving with Bitcoin's price swings. Nobody's immune to that.
And it sounds like many peers are facing similar issues. Volatile profits or losses, investing heavily in hardware upgrades.
Yes, the need for efficiency upgrades and dealing with rising energy costs, those are industry-wide pressures. Hut 8 isn't alone there.
But you mentioned a key differentiator might be Hut 8's integration of power generation. Not everyone's doing that.
Right. Some competitors are purely focused on maximizing hash rate, buying power from others. Hut 8's strategy of controlling some of its own power generation could be a significant advantage.
How so?
Potentially more stable, predictable energy costs. Less vulnerability to price spikes from third-party suppliers. If they execute well, it could lead to better margins, especially if energy markets stay tight or volatile.
Looking forward then, potential catalysts. They have options to buy more Bitmain equipment, potentially pushing their hash rate up to around 25 exahash.
That would be a huge jump in capacity. If Bitcoin market conditions are right, that could translate into significantly higher mining revenue, make them one of the larger players by hash rate.
And the continued development of those power assets, capitalizing on electricity shortages you mentioned, that could be a whole new revenue stream.
Exactly. This is the core of their diversification. If they can successfully build and monetize those power assets, selling power, grid services, whatever it might be, it could really change their revenue profile, make it less dependent on just mining.
But there are risks, of course. Regulatory changes are a big one, either impacting crypto or the electricity markets they want to play in.
Definitely. New environmental rules for mining, changes in electricity market structures, tax policies. Any of those could impact their plans and profitability. It's a risk you have to watch.
And the core mining business. If Bitcoin prices stay low or choppy, the margins there could remain under pressure while they wait for diversification to kick in.
That's the timing risk, isn't it? How long until the energy infrastructure side contributes meaningfully? Can the mining side hold up until then? That's a key question for investors.
Analysts seem, well, cautious. Acknowledging the weak earnings now, but seeing upside if the strategy works out.
Which sounds about right. Cautious optimism. They see the potential in the pivot, but also the execution risks and the current financial headwinds. It's a balanced view of a company in transition.
So, summarizing our perspective, Hut 8 is definitely in a tough spot financially right now. Big revenue drop, significant net loss in Q1. It's a period of pressure.
No doubt about it. The numbers show the challenge clearly, highlights why the strategic shift is probably necessary.
But that strategic pivot, becoming this integrated energy platform, not just a miner, offers a potential path forward. Diversification, maybe more stable revenue down the line.
It's a bold move, trying to navigate both crypto and energy complexities. If they pull it off, it could build resilience.
And the market's positive reaction to the strategy, despite the bad financials, suggests investors see something there. some confidence in that longer-term vision.
Yeah, that reaction provides a glimmer of hope. It suggests the market is willing to look beyond the immediate pain and bet on the future strategy, at least for now.
So what does this all mean for you if you're following Hut 8? It looks like a company in a major transition, facing real financial headwinds right now, but making these big strategic bets that have caught the market's eye.
The success of that diversification into energy infrastructure seems absolutely crucial. That's the story to watch.
And the whole situation really underscores just how volatile and fast-moving these sectors, crypto and energy, can be.
Absolutely. Ultimately, their long-term success probably comes down to execution. Can they actually deliver on this strategic pivot while managing the risks in both industries?
We've covered quite a bit on Hut 8 today. If you found this useful and want us to explore other companies or investment ideas, please do subscribe, like this discussion, and maybe leave a comment with your suggestions.
It really helps us figure out what topics you're most interested in for future explorations.